A very warm welcome. How you feeling, Cognoscente? I'm Aumrie in Los Angeles. This is a business tea session. It is an inspiration nest of new ideas so that you can practice generosity. We build profits so that we can be generous. It's a spiritual practice, to tell you, really. And so we're going to be talking about money in just a moment, but we have to get our minds right and our hearts right. That's right. It's proper order. Before you talk about money, before you talk about the accumulation, you must first get your mind right and your heart right. Let's take a moment to breathe. Inhale. Release. Left hand coming towards your heart, right hand resting on top, allowing it to settle right at your navel, taking a deep breath in. Into our Qigong movement, hands circling towards our side, coming up along as if they were rising on a ball till they reach the top of your head. Hands turn inwards, facing down as they lower. That felt really good. Let's do it again. Hands coming towards the side, rolling up as if they were floating up on top of a ball towards the top of our head. Hands turning down, turning in as we go down. Felt really good. Left hand coming on top at the heart, right hand resting on top, thumbs touching together, taking a few deep breaths in and out. Right? So, we're going to be talking about positioning ourselves for 2019 in emerging markets, how you can crush it in the emerging markets in 2019. Let's get into it. So this is a business tea session. It's an inspiration nest of ideas. We're going to be talking about flexing on emerging markets in 2019. I'm Aumrie. This is the tea session. And as Cognoscente, we walk this contemplative path towards sustainable profits in order to practice generosity. That's what this is all about, friends. And so before we begin, we start with a self-care check-in. As I said, you have to get your mind and your heart right before you can get your money right? So the self-care check-in, we start with our inner life, because our inner life, our thoughts and our emotions, they influence our decision-making. And when we introduce ourselves to new ideas, it creates tension and awe, which activates the imagination and innovation. So, we begin with this self-care check-in. Have you spent 10 to 15 minutes in contemplation today? That could be in meditation or reflection or centering prayer or yoga or qigong or tai chi, even budgeting. All these aspects of taking inventory of what's going on inside. That's a must. 2. In this moment, right here, right now, are you all right? If you are, let's proceed. If not, you have to gain sufficiency in those areas first, right? It's just like Maslow's hierarchy of needs. If you don't meet the bottom needs first, how can you begin the process towards actualization? Reach sufficiency before you go down this process of development. Did you get 7 to 9 hours of sleep? This is a biggie. Sleep is crucial. Every spiritual tradition says that we must gain rest. We must gain rest. Rest is a commandment. Rest is a part of our day-to-day life. It's how we function. It's how we elevate. If you're not doing yourself, I know it's really popular in motivation circles to say, I'll sleep when I die. But the truth is that you'll likely go a lot sooner if you're not getting enough rest. So rest. Hydration. We think a lot about consumption, but are we giving ourselves the recommended daily amounts of water, of hydration? You got to do that. You got to keep yourself refreshed. You got to keep yourself renewed. You got to keep yourself restored. Hydration is how we do that. And for self care, have you spent time in vigorous movement today? At least 45 minutes, exercise, movement, getting that heart rate up, getting those endorphins flowing. That's part of the process. That's part of how we move and how we instill new ideas and keep ourselves on a sustainable path, on this contemplative path. We need to do this as cognoscenti. We need to rest. We have to hydrate. We have to practice contemplative practices. We need to do things like move. These are all part of our self-care checklist, right? So, in this business tea session, as always, we use the finest teas. This is an oolong from Taiwan, High Mountain Oolong. It's going to be absolutely exquisite and extraordinary. And so in this tea session today, we're going to be talking about emerging markets, how to flex on emerging markets in 2019. There we go. Let's get some of this hot water, get this steeping as we begin to start our practice. As you know, the first pour is always a rinse, right? We're not drinking this. This is only to rinse the tea. That's lesson one for all you newbies to the tea ceremony. You never drink the first pour. It is a flush. It is a wash. It is to rinse. There we go. And for all of you who are just down learning about this tea session, so I'm going to keep it 100. This tea session is for informational purposes only, right? It's an inspiration nest of ideas. You have to go seek financial advice from a licensed professional, right? Know that all investing, it always involves risk. You could lose it all, right? So you're not investing your rent money, you're not investing your light bill. This is only investing what you can afford to lose. That's lesson number one, right? Keep a roof over your head. All right, so we're going to let this steep and we're going to get into what we're talking about. So why are we talking about emerging markets? Well, this is from Jeremy Grantham. He is a heavy hitter in the investment communities. And he says, there has never been a bigger gap between the U.S. and emerging market stocks than there has been now. The opportunities don't come very often. As I describe it, you buy them when they are very cheap. They become extraordinarily cheap. Suffer. You double down. Maybe suffer a bit more. And then you win. And if you can take the pain, you always win on those kinds of bets. And so most analysts are predicting that it's going to be a pretty bleak 2019 for emerging markets. And so that's why Grantham is talking about positioning yourselves in it, because emerging markets are astoundingly cheap, equities in emerging markets. And we're going to see a lot why. A lot of the reasons is because there's a lot of political unrest that's taking place in a lot of these currencies. The dollar is strong, which in a lot of these countries borrow in dollars, and so they have to pay it back, and it gets really pricey as the dollar strengthens, and these countries have to pay it back. Also, another reason why emerging markets, more than $46 billion was redeemed from the U.S. stock and mutual funds and EFTs between December 5th and December 12th, the largest weekly outflows since Lipper began tracking weekly flows in 1992. This according to MarketWatch. And so if you've been investing in U.S. equities for the last decade, it's been a banner time. U.S. equities, the large caps, they've just been going extraordinary. U.S. tech, they've just had extraordinary returns and extraordinary gains, and investors are starting to take profit off. The smart money is moving it off of U.S. equities and into safe haven cash positions, and into, for the more risk, for the risk averse, they're moving it into the safe haven cash positions, places like Australia, the Australian dollar, the Canadian dollar, the Swiss franc, the U.S. dollar. Uh, these are areas where people are moving their cash to in order to for safety. But if for those who are not so risk averse, who have a higher level of risk tolerance, they are betting on emerging markets, as Grantham says, knowing full well that we've emerging markets likely haven't seen the bottom in 2019. That starting off short term, emerging markets are likely to fall some more, and so this isn't so knowing that going in that emerging markets are likely to fall, but knowing that you're not trying to predict the bottom. You're going along the trend lines. We'll get into a little bit why we're seeing that. So, what are emerging markets? Emerging markets are developing countries that are shifting from agriculture to industrialization and digitalization. And this is really big. A lot of their traditional industries, they're shifting away from that, and they're going through this process that we've seen Europe go through, that we've seen America go through, that we've seen China go through, that we're seeing India go through. This is where a lot of the heavy industry, a lot of the infrastructure projects are going to be built in these countries where there's a growing middle class that's taking place. This middle class, as they gain more affluence, they're going to want to consume more. We've seen this play out in country after country, so we kind of know that there's a recipe book if you think of it that way as to how these things will flow. And so this is why we're positioning ourselves in emerging markets. And so let's look at some of the emerging market countries. So areas like Mexico, we have Mexico has a new president, AMLO coming in, and so we don't quite know all the trade policies. We don't exactly know what their governing philosophy is going to be. But AMLO, he's really set on reform. So this could be a place that we want to watch out for. Brazil has a new president, Bolsonaro. He's like the Brazilian Trump, and he's also very pro business, and so, but there's also a lot of unrest about his voting records, and so, and some of his comments. So Brazil is another area. We have areas like Nigeria, South Africa, Argentina, Peru, and Colombia. Um, Nigeria also going through an election. South Africa, they're really having a lot of conflict there. The rand is really suffering there. Argentina is struggling. Um, let's look at places like India and China. So China is the world's second largest economy. Um, China is expected to go through some slowdown. They're having increased bankruptcies that are taking place there. So China is definitely a place that's going to be watched. There's also Russia and Turkey. Turkey experiencing a lot of conflict there with their with their president. We have areas Bangladesh. Many of people seeing Bangladesh as a new hub for development, for creating clothing. A lot of clothing factories are being created in Bangladesh. There's Indonesia. So this Southeast Asia corridor, this is the place that I really think that we have to watch out for explosive emerging market growth in terms of fintech, insurtech. A lot of innovation is really taking place in this Southeast Asia corridor, and this is where I want to focus a lot of our attention on when we think about investing in emerging markets. Indonesia, Philippines, Vietnam, Malaysia, especially Malaysia, Indonesia, Thailand. These are all areas where, yes, short term headwinds are going to face a lot of these emerging market economies, but long term, these areas in Southeast Asia, they're really primed for growth. They have a large population, a young population, an educated population that's becoming more educated. Um, they're they're really linked into between two juggernauts that are moving. They're sound right in between China and India, and they're really positioning themselves for high levels of growth there. And so let's look at some of the charts surrounding EM. So when we talked about Grantham, he said that there hasn't been a larger gap between U.S. equities. U.S. equities is pictured here in this light blue. This is the Dow Jones Industrial Average. These are the heavy hitters of the U.S. economy. You know them. Um, these are the Microsofts. These are the IBMs. These are the staple, the big banks, J.P. Morgan Chase that we all know. This is what they are. As you can see, they've had a record run up um, in the over the last decade. Look at this. Look at this. It's just shot up really. And this lower line are the emerging markets, and so these are all the kind of countries that we just discussed. And as you can see, their trend line as well. They ran into some headwinds, and they kind of peaked right here in January 2018. So at the start of the year, they kind of hit their peak, and then they started this decline. And so this gap right here is what Grantham was talking about. As you can see, well, let's go. This is the 5-year chart. Let's look at the max chart. You can just see the vast separation that's taking place between the two right here, right now. And so a lot of people, well, a lot of investors, they're, as I said, they're moving their money this from the U.S. equities, from the U.S. stock market, either putting it into cash positions. Maybe some of them are hitting up some of the cryptocurrencies, which we'll get into, and some of them are going to be moving into the emerging markets. So let me grab some of this tea real quick. Kind of oversteeped it, but that's okay. The second pour is my favorite, and I like it a little robust. The second pour is also where they say that wishes are granted. You know, it's the fortune cup, really. So let's take a pause from this money, take a inner check, inventory, how we're doing on the inside. Inhale, release. Hmm. This is a robust, flavorful. Oh yeah, that's some good tea right there. Excellent. Let's get this pour going again. Absolutely wonderful. This is exquisite. And so, for those of you who don't have this set up, this is what you need. Loose leaf tea is the way to go. I'm telling you. Check this out. This is called an I Ching teapot. It's a small teapot. It's made for 1 or 2 cups. It brews each cup individually. Absolutely extraordinary. We let the loose leaf tea brew in here. It has a strainer that's built in. And we pour it into this teacup right here. That is, that's some exquisiteness right there. And so as we think about some of these emerging market trends, I'm going to sip on this, so don't mind me. And so I was saying there's a major gap between U.S. equities and the emerging uh, markets, EFTs. And so this is where we're positioning ourselves. And so if you're thinking about moving into emerging markets, getting emerging market index fund, that may be a smart alternative. And so you don't have to pick out individual companies that are maybe going gangbusters, or you could pick out particular countries that may be primed to move forward. And so that's where we're looking at the Malaysias and the Indonesias and those other Southeast Asian countries. But also, if you're, if you have a high risk tolerance, you can look at some of the emerging markets, some of the areas like the rand, like the peso. A lot of these areas, they may be primed for growth as well. So looking at this chart for how the emerging markets have compared against the dollar, Brazilian real, the South African rand, the Mexican peso, the Turkish lira, the Russian ruble, the Indonesian rupee. They've all underperformed the against the dollar, and so we're really seeing they're likely haven't bottomed out. And so I want to say that again, these emerging markets have not bottomed out. And 2019, they'll likely begin keep falling, and towards the start of the year, maybe even towards the mid-year. But we're positioning ourselves towards um, towards mid 2019 um, for some perhaps to rise. And so analysts, they're saying it once again, emerging market equities have underperformed global peers since 2010. So since 2010, they've really underperformed their peers. And so if you're thinking about some of these emerging market stocks, once again, we want to really check out the Southeast Asian corridor. This is the area that we really want to focus our attention on. A lot of these places, they may have a lot of headwinds for them, which may make it really really we may be primed to be risk averse in some investing in some of those areas, especially Turkey with Erdogan right now. There's just like political chaos, and you have to think about even in some of the more developed economies, the U.S. economy is expected to slow. There's a new study that was released by the Wall Street Journal that said that people are becoming more pessimistic about the U.S. economy. And so what we know is that things become self-fulfilling prophecies, right? People are saying the U.S. economy is slowing. The U.S. economy, they're more pessimistic about its outlook, and so they're taking a step back from it. They want to hedge their bets on it. In Europe, they're going through all their turmoil as well. They have the Brexit going on. Germany is going through some contraction. France is experiencing some internal conflict with Macron and the yellow vest protesters. Italy, the banks situation, it's a ticking time bomb. Really, there's talking about some budget reforms. Um, Spain is like the bright spot, and they still have like massive unemployment and everything. So Europe, that's really not a good place. Or Nigeria's economy is so tied to oil, and oil prices are not expected to rise in the short term, even with the cutbacks by OPEC. We see that U.S. with the shale oil boom that's taking place, it's really not the prices of oil are not able to be picked up when U.S. is a massive net exporter of oil. What other emerging markets? South Africa just going through a lot of conflict right now down there, and it's really doing a number on their economy. It's really contracting in a number of areas. Pakistan is really been aligning a lot with China through the Belt and Road initiatives in the past, but there has been some growing conflict in Pakistan about Belt and Road initiatives, about how Pakistani workers are being treated by some of the Chinese employers, and that is really generating some high levels of tension. And so we may see we've seen a lot of backlash. We've seen some attack on the Chinese embassy over in Pakistan, and so there may be some backlash going on there. Let's see, where else are we going to look at? And so Vietnam is really becoming a manufacturing hub, and the tourism industry is really starting to pick up in Vietnam, and so this may be a play. Manufacturing in Vietnam may be a play for us. When we think about fintech, Malaysia, Malaysia is where we want to take a look at in terms of startups, in terms of Malaysia, Indonesia. These are where we want to look at in terms of this large growing middle class. I mean, they have a massive growing population there. You know what? Let me look this up. Let me look up the population of Malaysia and Indonesia. Let me see. Okay, let's see. All right. So, okay. So it looks like we're having some difficulty here. Let's see. With the connection. All right, so Malaysia's population 31 million, Indonesia's population 264 million. That's a sizable. It's a large uh, contingent of people, um, and so these two countries are beginning their industrialization process, and this can really be an area of growth that we really want to focus on in 2019. So let me know where what you are thinking about investing in 2019. Right, right, all right. So this has been a great business tea session. I really appreciate those of you who have taken the opportunity to join. Let's see if there are any comments. You can always, just a second. Okay, so if you want to book a private tea session, you can always book a private tea session. You can DM me on social media at Aumrie, that's Aumrie, or you can send me an email at Aumrie@Aumrie.com. That's Aumrie at Aumrie.com. Let me know what your play is for 2019. If this is something that you're seeing, that you're thinking about investing in or moving into, or are you going to sit out on the emerging markets in 2019? Where, whether you're thinking about doing it or not, let me know. All right, everyone. Until next time. Ciao.